welcome to the Hilltop Wealth Advisors fourth quarterly investment and market update. I'm Ben Yeager and this is Rusty Erickson.
Great to be here.
We've had some recent market volatility, so this update is very timely, and we kind of want to jump right into that. Rusty, could you tell us a little bit about what's going on?
Sure. And just in the last month, we've seen the S&P 500 come down about 10% from where it was earlier in the year. And so this has certainly been something that we've been thinking about and have gotten some questions from clients about. Right now, we really see this caused by two primary issues. One is concerns about trade policy going forward here in the U.S. and around the world. But secondly, also with the Federal Reserve raising interest rates, that's probably been a key driver of some of the recent volatility.
Yeah, so Fed Chairman Jay Powell's been in the news quite a bit lately. A lot of kind of market reaction to that as well. Tell us a little bit about what the Fed is doing.
Sure. So if we recall back about 10 years ago to the financial crisis, the Federal Reserve reduced interest rates pretty substantially at that time in order to ease monetary policy and help the U.S. economy and the global economy recover. And so thankfully we've had a pretty robust period of growth since then. And as we've seen growth tick up, I think there's been a strong argument from the Federal Reserve that it makes sense that interest rates move back up. Certainly not to where they were before, but we don't need to have interest rates as low as they were previously. So for example, in 2015 and 16, we saw the Federal Reserve raise the key Fed funds rate 0.25% each year. And then in 2017, the Federal Reserve raised interest rates 3 times, and then so far this year, they've raised rates 3 times as well, and they might do it a 4th time before the end of the year.
So we're seeing a bit of a ramp up in rates here, in the frequency of rising rates as well. How does that relate to the U.S. economy and how the economy is doing here?
So I think it is a bit of a Goldilocks situation that the Fed is trying to navigate, where certainly they want to raise interest rates in order to maybe stave off some concerns about inflation fears, and certainly as the U.S. economy is doing well, it makes sense that we would see inflation ticking up a little bit. But also I think it is necessary for rates to go up just to reflect the overall health of the economy as well. And so in one way that we could look at it is maybe we don't need as much medicine as we did before.
Okay. And then it sounds like things are picking up here. How are things doing overseas? Last year we had this kind of global synchronization theme going on. What does it look like this year?
Well, we are still seeing global growth, and the U.S. is really the bright spot in the global economy. We're seeing very robust GDP growth here, historically low unemployment rates, which is wonderful. If we look around the globe, there's a little bit more of a headwind we see to growth within international markets. Certainly some of that is political concerns, but also some of it is back to where we started with some of the causes of the recent market volatility, which is around trade policy. But I think it is worth noting that the U.S. economy really was the first country to come out of the global financial crisis about 10 years ago. And so it makes sense that some of our international partners and some of the countries around the world are still at a phase that is a little bit behind the U.S. in the recovery and where they are. So, for example, if we just look back over the last 10 years, the U.S. stock market has done exceedingly well, increasing over 300% from the market lows in 2009. Whereas if we look at international markets, they've increased about 100%. And so we do know that there are periods of time where it can be a pretty long cycle where U.S. outperforms international, but we know that there are periods of time that go the other way. It's not necessarily that one's up and the other one's down, it's just that there's a change in leadership. And so for us at Hilltop, we see attractive valuations internationally still, and we wouldn't be surprised to see maybe a change of leadership here maybe in the next year or so.
Great. I appreciate that, Rusty. And if you have any questions about what we've talked about today, please feel free to reach out to us here at Hilltop Wealth Advisors. Also, please check out our website and our Hilltop Views blog. There's lots of great information there as well. And until next quarter, we look forward to talking to you again. Bye.